Welcome to the Optimistic Curmudgeon, where the best ideas win. I'm your host, Josh Herring. This is a show all about ideas, about how we can rebuild a collapsing culture. My guests all have the credentials, the wisdom, the experience to say something meaningful, to contribute to the rebuilding of our moment. Today, my guest is Frank Clement, Vice President of Strategic Partnerships at America's Christian Credit Union. I met Frank a couple of years ago, and we keep bumping into each other at various conferences. And today, I'm delighted to welcome him to the show. Frank, thanks for coming on the Optimistic Curmudgeon.
Thanks so much, Josh. And I don't know how you say the name of the show so trippingly. I'm afraid to even say it out loud. I'll just say it's good to be here on the OC.
There we go. Well, from a Californian, I'll take that as a great blessing. I would, I would struggle living in Orange County, I suspect, but I'll gladly take my show as the OC. That's great.
The real OC.
There we go. Well, Frank, before we get into it, and I know I'm really excited that you can help me and help our listeners know a bit more about the, hopefully, I don't know if I want to call it the exciting world of banking in the 21st century, but the necessary world of banking in the 21st century. I don't know that we can quite get along without banking in the mainstream economy, and I want to get your expertise on that. But before we get there, tell us a bit about your story. Where do you come from? How did you get into the work that you do?
Yeah, well, thank you so much. And yeah, to your point, I don't think anybody wants banking to be exciting. When banking gets exciting, we have bigger problems. So, so I've been with the credit union now for 6 years. But before that, I was working at Azusa Pacific University in their honors college. So I was the director of strategic initiatives there. It was a relatively new program, great books program. And so I had the privilege of getting to help shape that a little bit, especially on the marketing side and student recruiting. And, I loved it. I mean, I loved every minute of it. And, I think I could be just as happy there as where I am now. It's just, this is where the Lord led me. But, when I was at Azusa Pacific, I had the privilege of interacting with a lot of people in the classical K-12 space. This was 9 years ago, right? So by no means new. I mean, you've got some classical K-12 schools that are hitting 30, 35 years now. But it still felt new because I think a lot of people were just waking up to it. And it was always fun going to SCL or ACCS conferences or CERSI events and meeting people who had just found out about classical education 2 weeks ago, and they couldn't believe it. And, it was always interesting meeting families because you can tell the parents were like, I want this for myself. So by gum, my children are going to get it. And the kids are kind of like, huh? But yes, I had the opportunity to go to a lot of those conferences when I was at APU, and that was an awesome privilege. And so then when this opportunity opened up at the credit union and I hopped over, something that I immediately came back to was the classical education world. That's just always been a big love for me. And my mom is a Latin teacher, so that's, I think I come by it honestly. And I feel like classical education is something that our culture desperately needs. It's something that individuals need, and so it was fun getting to be a part of that at APU and the honors college there, supporting this great books program. And it's been a lot of fun to get to support it from the financial side as well. And like you said a moment ago, banking is something that everybody needs. And so in that sense, it's very universal. But banking is also something that's very specific. And I think sometimes as consumers, we don't think about that as much. But if you're running an organization, that either your bank serves your type of organization or it doesn't. And if it doesn't, that's a pretty painful realization. If the bankers aren't good enough to tell you, you're not really our niche. And so it's been great getting to walk alongside quite a few K-12 classical schools all across the country, even a few colleges these last few years.
Well, that's fantastic. And I have to tell you, not that you're at all looking to jump ship, I'm sure, but if you ever do, you might be the unicorn that a lot of people are looking for. Because I saw a friend post last week about he's on a job search board and he's looking for this rarity of somebody who can combine operational skills with a clear understanding of the classical education vision. And it's really rare, I think, to combine both of those in one person.
Yeah.
And I heard both of those threads in your story, at least as your time with Azusa and then as you've continued on at the credit union. But you bring together sort of a business side, but there's also a philosophy and a love of the tradition, and your faith is in there. That's pretty fantastic to hear how you've been able to kind of follow those different those different strands, I guess, and to find those both going in a great direction.
Yeah. Well, I think, I mean, to your point, in terms of the unicorn that every school is looking for, there is hope on the horizon. It's been tough. I mean, the pivot to classical education, more and more schools either starting or converting from a sort of I'd say traditional Christian education model. And by traditional, I mean 50 years old rather than 3,000 years old. But, there are some great people now who are addressing the people side of things, both in the classroom and on the, in administration. And what I've heard a lot, just, unsolicited advice for anybody who's watching this. But I tend to agree with this. I think that the idea that for an administrator in particular, what you really need is somebody who knows how to run an organization. And so saying, you need to be able to speak, fluent Latin and Greek, and you need to be able to run a medium-sized business. That may be asking for a bit too much. And if you have to choose one or the other, I would say choose someone with that business acumen and trust that if they are indeed as good a leader as they seem, they'll figure out what they need to know. But more importantly, they'll empower the people, so that their academic leads to take charge of the curriculum and making sure that things are going well in the classroom. But I think, what schools need now is a strong business sense at the helm. And, Eric Twist over at Arcadia Education is doing awesome work there. And he's been putting out a lot of really good information for people to chew on. So I'm excited to see how that plays out.
I mostly agree. I would only push back a little bit on the. I kind of grew up as a teacher in a school that initially prioritized that operational side without taking care to make sure there was a clear classical alignment, classical vision. The focus was initially on growth and on them managing that growth. And we sort of, as a school network, we sort of sat up about 10 years later and realized we had grown to a substantial size, but we had not actually sat down to define our purpose as a faculty, to kind of lay out what was in the pale and what was beyond the pale of what we were trying to do. We had at Thales Academy, I mean, we just had several, I was involved in several this is 5-6 years ago at this point. There's other people doing that now, but I remember conversations we were trying to kind of initially navigate. I mean, this is COVID raised a lot of this for us, as I'm sure it did with a lot of other organizations. To what degree are we interacting with political issues, and when do we call things fads? When do we see those as really lining up with our core purposes that we are trying to deal with as a school? Yeah. And really, I think that's the place where these two things aren't as separate as they sometimes seem. I mean, and so I say all that to say, I think I've at least come around to the position of thinking when a school is starting, especially in our model, schools would start really with K-5. The number one issue for a brand new elementary school is the safety of your smallest children. And so parents do not care a whit about the philosophy if they don't think their kids are safe. Yeah. And so you've got to have people, especially if you're in a charter situation, or if you have anything to do with state laws that govern your particular model, you've got to have somebody who is not going to get in trouble with compliance. And then you've got to also prove the validity of your school with test scores and so on. Yeah. But I think very quickly after the next stage needs to be bringing on somebody who really can do the academic formation of a faculty and can really articulate the way a curriculum works. And so if that's not the initial operational lead, that's got to be a very soon second position on administrative leadership hire, I think, for an effective team. And but I've also been part of a school that was sort of recovering from having a very idealistic homeschool mom who was the principal and no one was classical enough for her. So I joined the team when everyone still had like traumatic memories of stopping by the office for that day's lesson plan that were like written on a sheet of paper. I was like, it can be done very badly on an idealistic level, but like there's always those two sides that have to come together.
Well, and okay, now you've got me on my soapbox.
There we go.
The idea of paideia that I'm sure anybody watching is already familiar with, we can't lose sight of that. And that's true, I think, for the movement, but especially true at the school level. And I think that's kind of what you're touching on is if you had somebody who said, I ran a Fortune 500 company and now I'm willing to run this classical, K-12 school. Okay, great. But do you understand the paideia, right? Do you understand what it is that we're trying to transmit to our students, to the next generation? Do you know what the end product is supposed to look like after they've gone through this 13-year experience, or, however many grades your school serves? And I do fear, whenever something catches on, whenever something becomes popular and you have people flooding in, and it may be that some people are drawn particularly to the aesthetics of classical education. They like, the old books on the shelf and maybe a bust of Aristotle next to them. Have they read the books? Not necessarily, but they like the idea of the books, but if they don't have a firm grasp on the paideia and realizing, maybe these books aren't even necessary, these books in particular, for transmitting that paideia, or maybe just some of them, or maybe just excerpts, but having that firm handle. So I guess that is, to your point, having that strong academic understanding. And I hope that we don't lose that in the movement. I hope that we don't have so many people coming in who are like, this is awesome. And you know what would really juice it? Let's, 3x our school size. Okay, great. But not at the expense of continuing to transmit a consistent paideia.
Well, and we're at this, I keep thinking we're at the tipping point moment, and then there's a larger tipping point moment. I mean, 2 years ago, I think there were 4 states that passed school choice bills. I keep hearing rumors that Texas is just about to pass a giant school choice bill.
Yeah.
I mean, and if they do, like, that's really a game changer, because there's already a lot of classical school infrastructure located in Texas. They've got the University of Dallas churning out great teacher candidates for that movement in Dallas itself. But that could be, that's a whole nother question then, of like just how mainstream can classical ed go. And I think it will only remain a discernible thing in as much as it's really transmitting that culture. Mortimer Adler used the word enculturation to describe what a good school is trying to do. You're trying to enculturate an appreciation of ideas, a right love within the next generation. And you mentioned earlier that some of these operational folks would kind of pick it up. I've seen a lot of folks do that, and they've really benefited from kind of, I remember walking into my old school several years ago, and my former boss pulled me aside, and I was shocked. She wanted to talk about Paradise Lost, because she had just, she'd had several students that were really thinking about Paradise Lost. So she grabbed a copy and she started reading Paradise Lost. And I'm standing there in the break room, and she wants to have a long conversation about the doctrine of sin because she's been reading Milton. And that was her kind of picking up a piece of the tradition she hadn't encountered before. Wow. And so I think you're probably right that a lot of these folks who are getting in, they'll see what's so good about this. And hopefully it shapes them as well, so that I guess we're kind of making unicorns in that way.
Well, I think the movement won't work if it's forever a niche thing. So the whole point is it's supposed to restore all of society, and we should want everybody to, I'm out of my lane probably here, out of my depth, but to me, a big part of classical education is, do you appreciate what is old? Do you appreciate what came before? And can you look at something and say, even though this is old, I see that this is good. And you can also look at things that are old and say, that's bad, and I'm glad that we were able to, jettison that long ago. But I do think it's, that chronological snobbery that C.S. Lewis talks about, that sometimes we look at old things and say they're automatically bad. And, these schools that are like, we need to raise more money so that every child can have an iPad. It's like, why? Why do they need an iPad? How will that help them? That's just a tool. But I think, I just think of my own parents' education, and they were both learning Latin in the public schools, and that was when school opened with prayer. And, there was, I think, a more unified understanding of what American culture was and what it was supposed to be and what we valued. And then we wanted to, like you said, enculturate our students. We wanted them to receive that. And then, not to get too hot button too soon, but this interest in diversity that abounds, or at least has in recent years. It's like, how could we? It's a bizarre thing, right? It's like, how could we possibly teach anything for fear that that's not what this particular student needs? Because every student needs something different, because we value diversity. Well, then what's the point of having a school? Why would you put 30 students in a classroom if you've already kind of given up and accepted that there's no way you could teach all 30, because all 30 have, their own unique needs? then why have a school? And so I do think getting back to this idea that we're not saying that every school, maybe schools shouldn't open with prayer. Maybe we say, in support of religious liberty and something that the founding fathers fought for, maybe we won't have prayer to a deity because that's too divisive, but we still have a pretty good idea of what we all think a good American is. And there are moments in American history that we want to celebrate, and we want to, teach the students that with a sense of pride, rather than, okay, we're going to go through the list of all the horrible things that Americans did so that we can all be ashamed that we live in this country.
Oh, you've touched on so many pieces. I want to follow up on a couple of them. We got to get to banking, because that's okay. you got to help fill my lack of knowledge about this topic, Frank, here in a second. But I think you've hit on a real a fault line, if you will, where there are certainly strands in the classical movement that my friend Adam Mangana once told me that he thinks of some folks as purists. They sort of are like, oh, well, it can only be my brand of classical, and if it's not my brand, then you're not doing it right. And I've met some of those folks, and they're generally doing good work. I just wish they would not be quite so polarized in their or so particular. I'd like them to have a slightly broader view. But there's also folks who really are quite willing to draw such a big tent that they're bringing in, or they're willing to bring in, the exact same flaws that really took that 1950s era public education that had its own faults, to be certain. I'm not a fan of compulsory education. I would like to have gotten rid of that 70 years ago. But the curriculum was sound 70 years ago in the typical American high school. And that's just simply not the case anymore. And those same impulses to focus on what divides us and to focus on various strands of identity politics. I lump feminism in there as a major problem of kind of corrupting reading lists and setting anything other than excellence as the criteria for what we require students to study really leads us down a bunch of mediocre and divisive pathways. Yeah. And so I do think there's part of this movement, as we've been calling it, which for any listeners or viewers who are new to this, we are talking about a hard to define movement of anywhere from 3,000 to 10,000 schools across all 50 United States. That's made up of homeschool, public school, private school, Christian classical, secular classical, charter. There's a bunch of different types of this. But what I think they all have in common is this recognition that there is, in fact, a universal human nature. It does, in fact, mean something very particular to be human. And there's a great complexity within that one thing, what it means to be human. And that what we're doing in the task of education is helping students fulfill that potential. And in doing that, we're helping students look at the received wisdom of past generations and be able to take ownership of that. I love, I think it's Edmund Burke, it might be Chesterton. I sometimes get those guys mixed up, but I think it's Burke who talks about this as an inheritance. And we're asking students we're giving students that inheritance. And I think that helps encapsulate just what's wrong with a progressive model of education that rejects a lot of these things that every generation has encountered and thought through and learned. It's literally the same thing as somebody kind of coming in and say, okay, I'm here for the reading of the will. And the lawyer decides, you know what? 80% of what your father left you is really irrelevant to you. So I'm just not even going to read 80% of the will. We would all look at that and think that is horribly unjust. That is wrong for the lawyer to make that decision. And in the same way, modern progressive education makes that same decision on behalf of students who are not yet willing to decide what they will take and what they will leave aside in this inheritance. Yeah. C.S. Lewis talks about this inheritance. He uses the phrase "the Tao," as it's not this rigid thing that always remains the same. It's a tradition that every generation curates, and so the inheritance is getting refined. It's why you can jump in at some moments in time and think, oh my goodness, these folks inherited some awful cultural baggage of slavery, of sexual practices, of injustices. And you jump into our day today and then think, well, we too have some really weird injustices. And our children are probably going to have to decide that they don't want to carry this on to the next generation. There's a a purification that happens over time. But cutting off 80% of that and not even giving students access to it, I think is an incredible injustice to that generation of students. Any last thoughts on this one before we go on to banking?
Well, a personal favorite analogy is, in the world of music, you had centuries of classical music, and it was pretty formal, it was pretty rigid, right? And if you turn on the classical radio station, you're going to realize, like, even though I've never heard this piece before, I kind of know where I am in this particular movement. And and then you had the jazz musicians come along, and these were people who were classically trained, incredibly talented, and then they broke the rules. But at least it was sort of okay because they knew the rules to begin with. And so they were breaking them carefully and intentionally, and they're trying to, do something. And then you kind of think of, and I'm fine with rock and roll music, but then you have like the rock and roll generation that's like, we want to break the rules, but they didn't bother to learn the rules first. And so they weren't, they didn't start from this position of knowledge and accomplishment. They were kind of like, why don't we just break the rules by not even learning in the first place, and then seeing what happens when we play the same 3 chords over and over. And I kind of think that's what's happened is, everybody wants to be the next disruptor, and they want to, innovate, and that's fine. There's a place for innovation, and America is, the home of a lot of innovation, but you kind of have to know what came before, because you may end up, retreading old territory. It may be that your so-called innovation doesn't even, hold a candle to inventions of the past. And so having an interest in what came before, like I love that idea of the will, right? Knowing 100% of what you've inherited, and then saying, you know what? I don't know why Grandpa collected all these weird, stuffed cats. I'm going to sell them. I'm going to sell them on eBay. I'll find somebody who wants them, and I'm going to focus on this other part of the inheritance. But at least look at the whole thing.
Yeah, I mean I love that music analogy. That's fantastic. And even as much as it works as an analogy, it probably also explains something about a general decline in musical knowledge and probably decline in musical skill. At least in terms of what today passes for popular music versus what passed for popular music in, say, the 1940s. Yeah. Bing Crosby was obviously an incredibly skilled musician. I don't think I can say the same thing for Kesha, if I could just draw an obvious contrast.
Whoa, low blow.
I know, but at least I won't try and burst into this. I don't think this is Kesha.
I think you just lost 3. You just lost 3 followers on YouTube. Yep, I see it ticking down.
Oh, that's fine. Well, Frank, I'm glad to know that. If we get the two of us together, we can go on quick rants about classical ed all day, every day. I really want to get into banking, and I want to at least situate this a little bit with thinking about the role of banking in the 21st century. There's new things that are possible today, and it seems to me that a lot of those focus on really going straight to the consumer in a way. I have a friend who does a lot of, he's been successful using, I think it's the Robinhood app, where he just does his own stock investing. Now he doesn't invest on margin or anything silly like that. He's not one of those guys that like wakes up one morning to discover he's $1.5 million in debt because the stock crashed or anything. But then I've got other folks who they got deeply invested in cryptocurrency. I keep hearing about different groups that want to take money and invest it in gold for me. It seems like there are all these different economic activities that, in my head at least, used to belong to the institution of the bank in some way. But now there are all these other folks that want to sidestep the bank and go straight to the consumer. At the same time, we're in this modern economy that moves at such a different pace. And so in that context, with so much happening on an individual level and happening at such speed, what role does banking play in the 21st century economy?
I mean, you basically can't live without it, which is, I don't know, if you think about it hard enough, it gets a little bit scary when you realize what we've lost in terms of, a simpler time perhaps. But I mean, I think modern banking in some ways it's been around for probably 500 years or so, right? I mean, you had these Italian families that were like, wait a second, if we have locations in a few different major cities, and somebody comes and they says, I want to leave some gold with you here because I'm going on a journey and I don't want to get robbed along the way and lose my gold. So if I go to your other branch in the other city, can I withdraw the same amount of gold? Sure, no problem. Write out a little note. Here you go. Just share it with them, and they'll see our stamp with the ring on the wax and give you your gold back. So that's been around for a while. But that's essentially the role that it plays, is that banking, it keeps your money safe, right? So you've got your funds in a bank account, and it keeps it safe when you're not using it. And then hopefully it also makes it easy to access it when you do need it. But then also by protecting you, so that it's easy for you, but not easy for somebody else to access your money. And it's funny, like earlier I was ordering something online, and this just shows how far I've fallen, right? I was annoyed because they didn't have any of these like instant payment options. And I actually had to type in my credit card number, and I'm like, oh my gosh, it's 16 digits. This is going to take me like 30 seconds to put in the credit card number and the expiration and everything. So it's definitely, modern banking has created this expectation that everything has to be super fast. But of course the danger is when convenience rises for you, the consumer, convenience also rises for bad actors out there. And so, you can get robbed blind in a way that maybe you couldn't in previous generations. So that's certainly a risk. And so it's an interesting time, especially with this new presidential administration. There's a big focus on deregulation, and they're currently dismantling the Consumer Financial Protection Bureau, or the CFPB.
Oh.
And yeah, and I mean, they've been trying to do that now the Republicans have been trying to do that for a few years now. But I guess I'm a little torn on it, because I do work at a financial institution, and we do hear from people who like elder scams, where an older person will call in and they're like, oh, I need to withdraw all my money, and we want to take care of our members. So okay, what's going on? What, like, are you going to buy something? Are you going to go buy a boat or something? Oh, no, my my boyfriend who lives on the other side of the country, he needs it, and he's going to use that money to come out and be with me. Oh, okay. Yikes. So for your own good, I mean, this gets a little paternalistic, but like, for your own good, we're going to go ahead and not honor that request at this moment. We're going to try to gather a little bit more information, maybe educate you, see if you might be the victim of a scam right now. So that's certainly something that we see. And I know the CFPB tried to protect consumers from scams, from so-called predatory lending, high fees. They refer to them as junk fees. And of course, there's like two sides to every story, right? So for so-called predatory lending, they would say, well, if the only person who's willing to lend to them is lending at 300% annual, interest, but that's the only person willing to lend them money and they need to borrow money, what's their recourse? If they have to borrow to be able to pay rent, and they can't borrow because you just closed down that so-called predatory lender, so they can't borrow to pay rent. So now they can't pay rent. Now they're out on the street. Is that better than paying 300% interest? I don't know, right? I think it's never as clear cut as the political sound bites try to make it seem. But there was like a big crackdown on payday lenders, and they're predatory and horrible and all that. And is it my favorite? No. But does it? I mean, there's a reason they exist, right? They are scratching an itch in the marketplace. Ditto for the so-called junk fees. So like, you run your account negative, and suddenly your bank is charging you an overdraft fee. But guess what? Your bank let the transaction go through. So let's say it was, you were paying your mortgage out of your checking account, and you forgot to transfer some money over, and so you went negative. You're not late on paying your mortgage because the bank essentially made you like a short-term loan, but they also charge you $30 because you went negative, and you weren't watching, right? You weren't paying attention to what you had in your account when that transaction went out, when that money went out. So, was it a courtesy that they essentially let you make good on that payment, or should they have just stopped it, and then maybe you get slapped with a fee by your mortgage company because you were late on paying your mortgage, or maybe you're embarrassed because you're out at dinner with friends and your debit card doesn't work, and everybody's like, oh my gosh, what's the deal with Josh? Why can't he pay for dinner?
Right.
And so it's a thorny issue, and of course in our current moment, it's never dealt with very much subtlety. There's no nuance. It's always just, it has to be this or it has to be that. So I guess all that to say, I'll be interested to see what the next few months and years hold. But I think that there was probably too much regulation, and there were certainly instances like the Bank Secrecy Act, the BSA, that more or less pressed banks and credit unions into service on behalf of the federal government to surveil people. And yeah, so I think there's a case to be made that perhaps that's not constitutional. And I'm not a lawyer, and I do work at a financial institution, so I want to be careful with what I say. But I think it's there are a lot of people who have looked at the Bank Secrecy Act and said, I think the federal government is asking banks to do something that the federal government shouldn't be asking banks to do. If the federal government wants to figure out a way to surveil, I don't know, get something passed in Congress, but to press banks into service and kind of make them de facto spies on their customers on behalf of the government, it's a little thorny. So, hopefully in this moment of deregulation, they do a good job of dismantling the regulation that perhaps was costing people some constitutional liberties, but not go so full bore that they, actually put people in harm's way with some of these things you're talking about, where, a college student can suddenly seemingly be $1.5 million in debt because he was trading on margin on Robinhood. And then, people were committing suicide because
I was like, that was a real story from a year and a half ago. I was kind of appalled that was possible. I've not done a ton of stock investing. I was just like, oh my goodness, no one. I had to go through so many levels of verification to get pre-approved and then approved for a mortgage, and that was a tenth of what this kid was betting on a bad stock.
Yep. Well, and there's this idea, and this is in the investing world, which is not exactly my space, but there's the idea of an accredited investor where you have to have a certain annual income and you have to have a certain net worth. And you have to be able to prove all those things to have access to certain investments, because those investments are so risky. It's like we don't want some Joe on the street to say, I want a piece of that action, only to find out, that he's lost his shirt.
Right.
So I guess all that to say, as limited government as I tend to be, there are certainly instances of regulation that's meant to protect the average consumer that I think would be good to hang on to.
Well, it's certainly an exciting time. It seems like every morning I get to wake up to a new unfolding piece of the soap opera drama that is starring Donald Trump and Elon Musk. And my new favorite character this season is Big Balls. I just can't get over the fact that this is a real thing and he is a real guy. And he really is responsible for a lot of this. And I'm not upset about a 19-year-old. I just think it's the funniest thing in the world that so many official sounding people on major news stations have been saying Big Balls pretty regularly for about a week now.
They have to say it. They're just reporting the facts.
Now, if I got that acronym right, that's the Consumer Protection Financial Bureau. Is that right?
Close. So the Consumer Financial Protection Bureau, CFPB. Okay. Yeah, and that was an Obama invention.
Okay.
With Richard Cordray was the original director, and he architected a lot of that. Elizabeth Warren had a big hand in it too. Okay. And that was in response to the huge crash back in 2008 and this desire to protect people. And I guess cynics could say, was it really about protecting people, or was it about increasing power? Maybe it's a little column A, a little column B, right? I think we don't have to agree with people to see that they have good intentions in what they're doing.
Sure. But that's not been around for too long then. I was originally thinking that's different than the FDIC then.
Correct. Yeah. Which actually, I'm glad you brought that up. Okay, so can we change gears a little bit?
Sure.
So do you remember, so back in 2023, there were a few banks that failed, and they were big banks. So there was Silicon Valley Bank, Signature Bank, First Republic Bank, and all of those were top 20 banks in the US, and they failed. And what I think is so interesting when we think about the FDIC, since you brought it up, so the Federal Deposit Insurance Corporation, if you have your money at an FDIC insured bank, your deposits are insured up to $250,000.
That's what the sticker next on the teller's desk has assured me for probably 33 years now. That's right.
So the FDIC currently has $133 billion in their insurance fund. $133 billion. Silicon Valley Bank had over $200 billion in assets.
Oh.
and that was only the 14th or 16th largest bank in America. And then you look at JP Morgan Chase, $3.2 trillion. $3.2 trillion. So if for some reason JP Morgan Chase were to fail and the FDIC had to make good and give everybody $250,000, so how are they going to pay back $3.2 trillion with $133 billion? And that's just one of, you've got the five big banks, right? There's Chase, you got Wells Fargo, you got Bank of America. Now the others are escaping me, of course, but like all of them have at least $1 trillion. Like I said, JP Morgan Chase has over 3 trillion. And so there's this sense of security that people enjoy that may or may not be entirely rooted in reality. And so I bring that up to say, there's this idea of too big to fail back during the great crash, the great financial recession. And that's why the government was trying to move heaven and earth to save these big banks, because they realized if we don't save the banks, there's this old saying that what is it? It's when the tide goes out, you find out who was swimming naked. And so while the tide's in, everything's good, everything seems normal and fine. But when you do have one of these, once in a generation issues come up, all of a sudden you realize, oh, these safety nets that we were relying on so blithely maybe don't provide the level of safety we thought they did.
That's wow. That's I mean, I have occasionally looked at that and thought, okay. I think the sticker I'm remembering talked about like insuring individual accounts of up to 100,000 and then a total of up to 250,000, I think was how it was worded. But like thinking about like, okay, if I really had if something weird happened and I have a ton of money, I would probably start another account at $95,000 and I'd game this system. However, but I've never thought about whether or not the government actually has enough money to fulfill that promise. That's a pointless organization in one sense.
Well, I mean, thank God they haven't had to prove their mettle.
Sure.
But like it does explain, I think, certain things that we see happening. So First Republic Bank was one of the banks that failed back in 2023. They were about $200 billion in assets. And there were several other banks that said, we'll buy First Republic Bank. We think First Republic has done great work and, they kind of were down on their luck, but we'd be willing to buy them. But the federal government, the FDIC, brokered a deal to allow JP Morgan Chase to buy it. So already the biggest bank then absorbed the, 14th largest bank and just increased their asset size by another $200 billion. So if JP Morgan Chase was already kind of largely uninsured and then picked up another bank, that bank in and of itself exceeding the amount of insurance funds that the FDIC had, it's kind of like, why would you do that? But on the other hand, I suppose, I mean, if I had to, look into my crystal ball and guess, I would think that, government regulators look at JP Morgan Chase and they say, well, they're huge. They seem to have their act together. So we're going to entrust them with taking care of this. And in some ways, maybe we're even going to like tilt the playing field a little bit toward them. Because if they ever were to fail, like if they actually had to compete, according to free market, rules, and something bad happened, like a disruptor came along and just completely unseated them, that could wreak havoc that we at the FDIC could never even begin to untangle.
Man, wow. Look, we'll have to.
Sorry, this is totally depressing. The good news is there are places like America's Christian Credit Union where our asset size comes nowhere close to that amount of insurance. And I will say, a very practical step, right? This is all like big numbers that for people like us, we never see anywhere close to that. No. Practically speaking, don't have all your eggs in one basket. You should have accounts at more than one financial institution. And people saw that, and like with First Republic Bank, things were going fine, sort of. In fact, it looked like they were maybe not going to fail. Maybe they were going to be able to turn it around. Okay. But then when they had their quarterly earnings call and they shared what was going on, it basically triggered a run on the bank. And like overnight, they lost like 40% of their assets, right? Because everybody was pulling their money out, right? And that's the interesting thing too, coming back to sort of the smoke and mirrors around government regulation and insurance is part of it. It's almost, again, this is just Frank Clement. Okay. I want to be careful, but I think in some ways it's meant to be psychologically reassuring. Like, don't worry, it's insured. And then people don't do a run on the bank. And if they don't do a run on the bank, then the bank doesn't suddenly lose so much assets that it fails, at which point then the insurance is actually needed. So they are trying to maintain. And like I said earlier, we don't want excitement in banking because that usually doesn't go well. So we want to kind of keep this even keel so that we're not drawing on the insurance fund and potentially depleting it and then realizing, oh my gosh, what about all the other people?
See, when you're saying that, I'm thinking of two classic movies. One more classic than the other, I suppose. But the scene in It's a Wonderful Life when George Bailey and his wife they forego their honeymoon in order to have $2,000 in cash to tide everybody over until Monday. But then there's the other one in the original Mary Poppins movie where Mr. Banks, appropriately named, is and he wants this promotion to be made partner. And now there's a bunch of scenes we could bring up in that one, but I think the way the partners are portrayed in that movie, like they are the stodgiest old British men of a stodgy old British empire. And there's nothing funny about them at all. And of course, the contrast is Mr. Banks is somehow able to be that, but also laughing and floating up in laughing gas and all that stuff and flying a kite. But I think there is something key there in the line you mentioned about banking not being exciting. I actually want to know that I can put my money there and I'll get maybe a paltry 2% if things are really good. And I've always heard of a mythical savings account that actually gave 2% back. I've never seen that. I've just heard of it. But a CD that gives me back 5 or 6% is great. But really, it's just knowing that the money is there. You mentioned your bank in particular a second ago. I want to go there next because I am fascinated by the bringing in of value language in with America's Christian Credit Union. Your organization makes the claim that Christians ought to align their resources with their values. I know we've had in the last couple of years, I know of a couple of instances where folks have kind of publicly said, I was debanked because I supported a pro-life cause, or I really oppose DEI, or I disagree with transgender stuff, and so on. Can you walk us through your thoughts on why exactly does it matter that ACCU has Christian values? Yeah. And then does that extend beyond your organization to banking in general? Like, does it, as I suspect, I at least tend to assume that sort of a classical liberal value neutrality is actually existing in the marketplace. And then I'm always shocked when that's not actually true, but it's usually not really true anymore.
I think in banking in particular, okay, so the Wall Street Journal just the other day, they had this big article that all the largest banks in the US are quietly removing all references to DEI from their websites. Mm-hmm. And the justification in the article is that they're afraid of government action or litigation. Now, let's go back to 2022 when Roe v. Wade was overturned. All 5 big banks, announced in glowing press releases, good news, everybody. If you live in a state where you can no longer obtain an abortion, we will pay for you to fly to another state to get an abortion, right? So you look at what the banks were saying and doing in 2022 under a different administration. Now you look at what they're doing under this new administration. And I even think it's interesting, and I've been talking about JP Morgan Chase a lot. I guess they're the elephant in the room. But Jamie Dimon, their CEO, as early as January of 2024, so well ahead of the election, he had already started to, in public comments, change his tune on Trump and say, well, maybe Trump's not wrong about everything, and we shouldn't be alienating the supporters of his movement, and we're all Americans and rah rah rah. He's a smart guy. You don't get to be the CEO of the biggest bank in America by being a dummy. And so I think what you'll notice is that a lot of these massive banks, at the end of the day, they exist to make money, to boost shareholder value. They're publicly traded, and so they don't really have any values at all. They're just going to say what they need to say to continue business as usual. And so, the federal government wants us to, show a good faith effort of DEI initiatives. No problem. Look at our robust DEI program. Oh, you don't want us to have a DEI program because, that's X, Y, and Z. No problem. We'll get rid of the DEI program. They'll literally do whatever it takes to be able to keep, making a profit, which means then, and like Bank of America, they tweeted and they said, we've never debanked conservatives and everybody's welcome and blah, blah, blah. Right. I can tell you at America's Christian Credit Union, last year we had like 20 or 25 faith-based organizations come to us who had been debanked by large financial institutions. And they get a letter and they get a cashier's check and they say, we were told that we're no longer a customer of, XYZ Bank. I guess we need a new account. We have to start over. And, the banks never go into a lot of detail. They just, it's just sort of, you're no longer a customer, and legally they can do that. And I would say this is where I'm a strong proponent of the First Amendment. Like, I believe in free association, and if a bank doesn't want to serve a particular customer for whatever reason, I kind of feel like that should be acceptable. Similarly for customers, like you can't make me bank here. Right. I'm going to choose to associate with the financial institution that I believe has my best interest at heart. And so then you look at America's Christian Credit Union, and it's not just us. I mean, there are other faith-based financial institutions, and there are also community-based financial institutions that tend to look a lot more like their immediate community and have that community's best interests in mind in terms of how they serve. But for us, what that looks like then is, I mean, we would never debank somebody for, working at a faith-based organization. I mean, that we were literally started by pastors, and we've been serving clergy and churches and Christian schools and the people who are a part of those communities for 67 years. Like that's who we exist to serve. So we would never debank somebody because they're a part of that kind of an organization. But there's a lot of, like during COVID, we saw that some people were getting either debanked or they were having their loans called because of their public stance toward government dictates on COVID. And the banks, essentially, the argument they would make was because you are pitting yourself against, duly elected government officials, you are now riskier than you were when we first met you. And so for the safety and soundness of our financial institution, we are going to close your account, or we're going to ask you to pay your loan back early because you are now, your risk profile has changed. So that's how it was couched. And I would guess, on this DEI topic for a second, if the banks themselves are scrubbing DEI language from their own websites, it may be that during this current administration, they might identify organizations that have DEI policies and say, well, DEI policies are now, what's the organizational version of persona non grata? But we don't want
unpopular, maybe
unpopular, right? So we want to be careful about serving organizations that have really, loud DEI programs, because we're afraid that if you get into trouble with the federal government, or if you get sued, then that maybe changes your risk. So again, it's kind of, I think of in the Old Testament when it talks about relying on Egypt, and how Egypt is this, it's like a splintered staff that will pierce your hand. Like, you need to be really careful when you're relying on somebody who's willing to change their position. I mean, it's like Whiplash, the tune that these big banks are singing. So when you go to a financial institution that's smaller, that either is aligned with your faith, if you're a person of faith, or perhaps it's just a community-based financial institution where you regularly run into the president of the bank at the grocery store, those are, I would bank at a small local or regional bank before I would choose one of these big national brands any day of the week, because there's still the ability to have that human connection, and you can still trust that they're not going to change their tune quite as quickly, because they are rooted in a specific community, and they're worried about how their reputation plays in that one community, rather than trying to appeal to people all across the country, let's say.
That is a really unique answer. I was not expecting you to bring that out. It's very interesting to me that there's a sense in which having a commitment to Christian faith makes one institution actually more stable than these kind of behemoths, if you will. And it makes perfect sense what you're describing, as far as especially the local banking connection. I remember my uncle was a banker in Eastern Kentucky, and I mean he was very deeply connected in his county, and that was part of what he was interested in doing, is helping his county be prosperous.
Yeah. Well, and if I may, we were talking about classical education, and I love it. So I mean, we spent like the first 20 minutes talking about that. Sorry, everybody. But we at the credit union, we've taken a huge interest in classical Christian education over the last few years, and specifically, working with the overtly Christian schools. because that's a little bit closer to our charter. But I can tell you that, in 67 years of history, what we found is that people of faith make great credit union members and they make great borrowers. Our default rate on loans is like way below the national average. And it's because we're working with good people. And I love that you mentioned the scene from It's a Wonderful Life, because at the very end, when George Bailey's trying to explain how it all works, and he's like, I don't have your money. Your money's in, Bob's house over there when he got his mortgage. And so within, the Christian community for us, it's explaining that, Josh, if you had a deposit account with us, there's a good chance that your money, it's not sitting in the vault right now. It was deployed as a loan to a Christian school that's expanding, or it was deployed to a church that's, doing some renovations on their sanctuary. And so not only are you going to earn interest on your deposits because, we charge interest on the loan, and we're able to pass that along to you in the form of dividends. So not only are you earning money on your money, but more importantly, you can feel good knowing that your money was made available to something that you care about, if those are things you care about, rather than to something that maybe actually violates your conscience. And so there's something, and so I think that when people understand, they can a little bit more visualize where their money is when they're not actively using it. Even that, lends to the stability of the financial institution. And, obviously if you're worried that your financial institution is going to fail, I can understand why you want to get your money out of there as quickly as possible. But if you're also thinking, I love knowing that while getting a great rate on my savings account or on this certificate, I'm also supporting access to credit among faith-based nonprofits that don't always get the best terms. I like that. I feel good about that. And I want to leave my money there rather than maybe, constantly chasing the latest, doorbuster certificate that some bank is offering. And again, I'm not saying that you should have to sacrifice rates just to bank according to your values, but I do think it sort of creates a different kind of behavior set in people who get it. They understand, my checking account is an investment. I'm investing my money, right? When I leave it with the bank isn't just holding it. They're going to deploy it somewhere. And so when I put money in a checking account and I choose to trust this bank or credit union with a checking account rather than another one, I love knowing that they're going to do really good things with my money while I'm not using it.
Which, I mean, the sermon application writes itself here from the Sermon on the Mount, the parable of the talents, not the Sermon on the Mount, but that's even Jesus's advice. Like, you didn't, to the servant who did nothing with the money, the master's response is, why didn't you at least put my money on deposit with the banker so that it could have at least picked up interest?
Yeah, that's right.
I love what you're describing for kind of two main reasons, or I guess three reasons. I mean, first off, you're talking about a way of helping to build community, which seems to me to be one of our biggest needs in modernity. We have so stripped away the core pieces that help people live well together that I'm interested in almost anything that helps bring people together in a substantial way. And if it's true that where your treasure is, there your heart will be also, that doesn't have to just be a warning about making sure you don't overvalue earthly goods. That can also be an encouragement to think about, well, where are you placing that treasure on this earth? Secondly, you're describing Christians in particular as being people who have a longer view in mind. I think that's when folks start a school, they're usually not starting a school thinking, well, I'm just going to be involved in this for a year or two. Like, usually the parents who are starting schools, not always, but typically have younger children, and they've just started to see how bad the educational options are around them. And they're wanting something for their children and then possibly also their grandchildren. For schools that last, they become multi-generational communities. And so starting more of those is great. The third thing I'm hearing in what you're describing is it reminds me of we were talking at the top of the show about that unicorn who can do both operational and kind of the philosophical vision alignment. The same thing can happen in the church world, where you have people of faith who have great theology, great ecclesiology, terrible navigation of the market. And as a quick illustration, I've been part of two churches that took kind of different approaches to real estate investing. We'll just call them Church A and Church B for politeness sake. But Church A was growing and was deep, had just finished paying off a building expansion. but had already outgrown their building before they had paid off the expansion and had no flexibility or movement over multiple years. And in part because Church A was deeply, deeply committed to not taking on any more debt, even though the initial loan was paid off. Church B had an opportunity to purchase an office building and didn't really have and the Church B was kind of a nomadic church meeting in borrowed spaces, didn't have a chance to purchase a church building, but had a chance to purchase an office building. But jump forward, I think 6 years, and that office building in a rising real estate market has more than doubled in value. And there's now an opportunity to be given a church building and then renovate that church building using the funds from the sale of the office building. And I just felt like hearing the financial report of the elders of Church B, I was just kind of like, oh my goodness, churches can also like play the financial game to some extent. And that's not inherently a bad thing. And it creates a whole level of flexibility and support that's not dependent on tithes from your membership, which at the same meeting, they also talked about just recognizing as an elder board that when financial seasons were rough, this was kind of this was just after like peak inflation under the Biden administration. We tithing is down. We're not trying to put some kind of guilt trip on folks. Like everybody's budget's really tight right now. I think there's everything you're describing. Like it's not that Christians are somehow locked out of the financial market, that Christian schools are locked out, but that you're just hoping that there is some wonderful, amazing philanthropist that you don't know about that will magically give you $20 million to build a gym and so on. Like there actually are ways to tap into the same mechanisms that other organizations use to
definitely. And a big part of that is then finding a financial institution that trusts you with that kind of a endeavor, right? And so an example that I always love to share, there was a Christian school up in Oregon, and they were looking to borrow some money, and they had been turned down by 5 different lenders. So 5 commercial lenders all said no to them. And when they found us and we said, okay, we see it. We see what you're working with, and we're catching the vision and we want to be a part of that. And so we ended up being able to make the loan to them, and they doubled in size. And so they've got double the enrollment, double the campus size. And I think they're now looking to, what else can we buy here in town? There's clearly a need. There's a desire for Christian education here in this community. And as we increase in strength and size, and, we can meet that need. And so there are going to be instances where, with your example of Church A and Church B, unfortunately, and I mean, even Church A, I get it. Like Dave Ramsey has been hugely influential, and there are a lot of people who are deeply suspicious of debt. And I mean, there's good debt and there's bad debt, and I think it's worth understanding that difference, and so that you can make prudent decisions when it comes to borrowing. But if I had to guess, I'd say that probably a lot of banks have dealt with these faith-based nonprofits where people have hearts of gold, but they don't really know what they're doing financially. They don't have that the people running the church don't have that knowledge base, and they also haven't sought to find it in their community. And that's the thing, is like at any given church, there's probably somebody sitting there in the pews who would be a wonderful resource to make good decisions about, financing and moving forward and growing, or, whatever it is that you're trying to do with your ministry. And so saying it doesn't matter that person didn't go to seminary, they're here every Sunday, so that clearly their heart's in the right place. And perhaps more importantly, they have the knowledge in their head to be able to help us do this thing. But unfortunately, I think a lot of banks have probably encountered churches that don't have someone sitting at the table with that knowledge and expertise. And so they'll just kind of say, no, why would we take a risk? Because, there are other people where it's much clearer how they're going to repay us. Somebody wants to buy an apartment complex. We understand they're going to get rent, and they're going to pay us the loan back with that rent. But somebody coming and saying, the Lord has called us to double the size of our sanctuary, and we're sure that enough people will come and will give, that it'll all be fine. There are probably a lot of banks out there that are like, I don't know, that feels a little iffy. Now, I will say we hear that story pretty regularly. And because we almost exclusively work with faith-based nonprofits, we can pretty quickly ask a series of questions, look at their financials, and see like, oh no, you're right. Like you're having way too many services on a weekend. If you had a bigger space, it would actually make sense because, as it is, you're probably not accommodating everybody who wants to come and worship. And that would be a good thing to do. Or, oh, your church has been in decline, and this is maybe a little bit of you're grasping at straws, hoping that if you increase the size of the sanctuary, that more people will magically appear. And that might not be the best, avenue for you to take to try to restore your ministry to, perhaps its heyday in the past that everybody is thinking about. So it's never clean cut, but I will say that banking, especially for organizations, it's highly relational. Like you need to work with somebody that you trust, that understands your situation, and you can rely on for good counsel. Either, yes, you should move forward, this makes a lot of sense, or we're going to say no, and it's not because we don't like you, and we're not questioning your faith. We're just saying that this is not the right time for this kind of a move, and we're trying to protect you from yourself a little bit here.
No, I think that makes a lot of sense. You focused a lot on the institutional side, but I know the credit union also does individual services. Walk us through some of the things available to individuals, just in case anybody listening is like, yes, I hate my woke bank and I want to go to a non-woke bank. And if that's the case, what do you guys offer to individuals?
Yeah, though I have to say, I wonder if there are going to be any woke banks anymore now that all the big banks are changing their tune.
Some things are changing. The public veneer is changing, but I'm trying to be. My impulse is to agree with that, but I'm trying to check that because I think that sentiment, because I think it has taken us really about 60 years to become a mostly publicly woke society. I don't think a really exciting election in November of 2024 is going to suddenly overnight change that. I'm personally holding out for a 12-year Trump-Vance regime that I think would substantially move us in the right direction. So there probably are still going to be, I think there are still going to be, and there certainly are still colleges and universities that are fighting these changes, hook, line, and sinker. There are going to be nonprofits all over the place that are still trying to rebrand or still trying to trumpet their message. The Democratic Party has not shifted their messaging or purpose at all. So I don't think the war is not won, if that makes any sense.
Yeah, for sure. So. And having a classical mindset, you see things in longer time frames. But yeah, I mean, at America's Christian Credit Union, we're a full service financial institution. And, so we've got checking accounts and savings accounts. If you want to lock your money up and get a better term, we offer certificates. And then we've got all the typical loan products you'd expect. So if you're looking to buy a house, though, these days it's not pretty, is it? But if for some reason, maybe you have to take a job somewhere else and you want to buy a new house, we've got mortgages, we do car loans. I will say, what the thing that is pretty cool right now is HELOCs. And we did a little post on our social media the other day about this. I have a HELOC on my house and I love it because, like other folks, I was blessed to be able to buy my house before COVID. And so then, when the value of the house increased, I was able to essentially, borrow against the increase in value. And so now my wife and I are doing some much needed renovations to the place using that HELOC. So that is actually, when you think about home loan products, a HELOC could actually make a lot of sense for people who have experienced this growth and what people are calling phantom wealth. It's like paper wealth, but you're not going to take a brick, out of the fireplace to buy a dozen eggs. I don't think a brick would even buy a dozen eggs. It'd probably take the whole fireplace.
How much is a dozen eggs going for in California?
Oh my gosh. I literally bought a dozen eggs this morning. It was $8.99. Oh! I know. Anyway,
just gonna drop my East Coast status symbol here and say my neighbor has chickens and she sells me a dozen eggs for $4, and I just am so happy to Venmo her those $4 every week.
Do you think if packed appropriately they would keep in a cross country? No, okay.
Well, if they weren't washed, they definitely would. But
oh yeah.
I think you'd smell them. I mean, they'd be fine, but you'd smell them. Those unwashed eggs last.
Yeah. And I'm sure once you add the postage, it wouldn't be worth it. But anyway, all that to say, America's Christian Credit Union, full service financial institution, and we do serve folks in all 50 states. So we have members all over. We've got about 80,000 members in the credit union now, and we, great online banking, and that's, Josh, you mentioned this the other day. You were saying, if I were to switch from my bank, could I expect a similar experience? And the answer is absolutely. I mean, at this point, pretty much every financial institution has online banking, mobile banking. We do too. And we're also part of the shared branch network. So there's 5,000 participating credit unions and another 30,000 ATMs. And this is the cool thing about credit unions in particular, is because they tend to be smaller than your average bank, we've found ways to band together. So, you're a member of another credit union, but you come in our branch, we'll serve you on behalf of your credit union. And then if one of our members goes into that other credit union's branch, they'll do the same. And so we want to be able to band together and have a little bit more, combined force, rather than just sort of, ankle biting and taking each other out, because that would be too easy. And, after 2008, 2009, the number of financial institutions cut in half. So with all the, the banks that failed and the mergers and acquisitions, the number of financial institutions was cut in half, and you had a lot of consolidation. And I don't think consolidation is always a good thing. I mean, obviously you want to reach a certain point where the financial institution is big enough to have all the services that you expect. But past a certain point, like we talked about earlier, it's diminishing returns / maybe it actually starts to increase the risk so much that it's not worth, whatever slick banking app they're able to provide.
Wow. Well, Frank, you've given us a great bit of insight into the interesting but not exciting world of banking, and we've actually had either a floating group of people watching that have stayed steady at 6 throughout, or we've had 6 people watching the whole time. So I'm going to ask my last question, but if anybody's watching currently on whichever platform you're on, if you want to type a comment on that platform, it'll show up here, and I'll put it on the screen, and we'll take your comments or questions here at the end of the episode. But I want to go back to an earlier topic we were talking about. You mentioned all of the changes happening with big balls and Doge currently attempting to rationalize our convoluted systems. We're still only we're recording this early or mid-February, so we're about 6 weeks into the Trump administration. We got 4 more years to go. Could you speculate for us for a moment? Just what do you think the banking climate is going to look like over the next 3 to 4 years?
Well, I will say this. The larger financial institutions can generally roll with the punches in ways that smaller financial institutions cannot. So I would say that as exciting as all this Doge stuff is, and the possibility for deregulation, especially deregulation when it comes to certain rules and laws that I think come at the expense of Americans' constitutional liberties. I will say, for instance, and during COVID, we saw a lot of this, and sort of on a related topic, RFK Jr., he had his book, The Real Anthony Fauci, and he talks about this idea of regulatory capture. He talks about how really big companies actually love regulation because they can afford it and their smaller competitors cannot. And I would argue, like Amazon during COVID, Amazon loved the lockdowns, and they were willing to, give everybody masks and make, put stickers on the floor in their factories telling people to stay 6 feet apart because they could afford that. And they knew that the mom and pop shops that they had been fighting for years were not going to be able to afford to remain compliant, and we're going to ultimately close. And we saw, thousands of small businesses across the country close. So I will say that whenever there is an intense period of change, either with more regulation or less regulation or just different regulation, when you have that kind of upheaval, the biggest players have the biggest war chests and can afford to roll with it and make the changes they need to make, whereas smaller financial institutions may struggle to keep up. And they may say, you know what, it's going to cost so much to change all of our compliance systems to meet this new regulation. It'd probably be better to just sell ourselves to the regional bank, so that we don't have to deal with all the changes that are coming. So again, I guess, it seems like an exciting time, but there can always be unintended consequences.
Sure.
And I think in the financial world, slow and steady is always best.
Wow. It's who knows what tomorrow's episode of the soap opera will bring. Frank, where can people find and follow you online?
Yeah, so I'm all about the LinkedIn. Love LinkedIn. My wife makes fun of me for how much I use LinkedIn, but there are a lot of great people on there. So I'm on LinkedIn if you want to find me there. I think it's Frank-H-Clement, or just look for the person who's a connection with Josh Herring, and I don't think you know too many Frank Clements, right?
No, I think you're the only one that I know.
Okay. And then you can also visit our website, America's Christian Credit Union's website. It's americaschristiancu.com, americaschristiancu.com, and you can check out all of our services. And, if any of this has resonated, and I don't want this to sound too salesy, but if you like the idea of knowing that, you can get a good return on your money, but doing it in a way that also, is a little bit more consistent with your values, and you're actually helping build a community. You're helping build that Christian community. That's something that you can partner with America's Christian Credit Union to do, and I think feel a little bit better about where your dollars are going.
Well, and hopefully, Frank, since we've kept a consistent viewer number on this live stream, we must have been more interesting than a really long infomercial. I know,
or they fell asleep. They might be asleep right now and forgot to log out.
That's entirely possible. Hopefully not. You and America's Christian Credit Union have been incredibly helpful to the Optimistic Curmudgeon. You guys were big sponsors in season 6 and season 7. This episode is not sponsored by America's Christian Credit Union. We're not receiving anything from them for doing this. I just really wanted to get together and talk with you about what's going on in banking. And because it seems to me like you've got a really compelling organization. You love working for them. And I love talking to people who actually love what they do. I find that that's pretty rare. Most people are sort of like, whatever. I have a job, pays the bills. But each time I've seen you at a conference, you're really excited about your organization. And it's been really fun to talk with you about America's Christian Credit Union, about banking, about the state of the world. And just maybe in a year or two, we could get back together and have a conversation about RFK Jr. once we know what on earth he's going to actually do.
Oh, it's going to be interesting. Well, thanks so much, Josh. I really appreciate the chance to come on here. And I always enjoy chatting with you. So thank you for this opportunity.
Marvelous. Well, thank you, listeners and viewers, for joining us here today on The Optimistic Curmudgeon. My guest has been Frank Clement, Vice President of Strategic Partnerships at America's Christian Credit Union. You've been listening to another episode of The Optimistic Curmudgeon. If you enjoyed this episode, like it and share it with your network. Help others think great ideas. You can find the show on all the platforms, but primarily on X as @TheOptimisticC3, on Facebook and LinkedIn under my name, Josh Herring, and on YouTube and Apple Podcasts. Be sure to subscribe to get the next conversation.